Most people believe wealth belongs only to lucky people or highly intelligent people. But the truth is different. Wealth grows quietly when ordinary people follow simple actions again and again. You do not need a perfect background. You do not need a high income. You only need patience, discipline, and the willingness to begin. Money is not just currency. Money is freedom. It gives you options. It allows you to work because you want to, not because you must. It gives you time with your family, space for your dreams, and peace in your mind. But building wealth can feel confusing at first. There are too many opinions, too many news stories, too many complicated charts and expert voices shouting different ideas. This creates fear and hesitation. Many people delay or avoid investing because they feel overwhelmed. If you feel the same, you are not alone, and you are not late. Right now is the perfect time to begin. In this book, you will learn how investing can be simple, peaceful, and friendly. You will learn how small steps create big results over a long period of time. You will also learn how to avoid mistakes many beginners make. With the right mindset, investing stops feeling like a confusing challenge. It becomes a slow journey toward a life with security and confidence. And this journey starts with understanding one important truth. To build wealth, you do not need to do everything. You only need to do the right things. This idea leads us to the first chapter, where we explore the beginning of wealth and how even the smallest step forward can change your entire future. Chapter 1. The beginning of wealth. Every great journey starts with a single step. Wealth is not born from big sudden actions. It is born from the small choices you make every day. When you choose to save rather than spend. When you choose to learn instead of fear. When you choose to start instead of wait. These choices look tiny today, but they grow into something powerful tomorrow. Most people think they must earn a lot of money before they can invest. This belief stops them from even trying. The truth is simple. You do not need a big amount to begin. Even a very small investment can grow into something meaningful over the years. What matters is not the size of the first step. What matters is that you take the step. Imagine planting a tiny seed in the ground. On the first day, it looks like nothing is happening. On the next day, still nothing looks different. But deep inside the soil, the seed is waking up. It is preparing roots. It is getting ready for the sun. After many days, the green shoot rises. Then slowly it becomes a plant, and later a strong tree. Your money grows in the same way. Quietly, slowly, but surely. Many beginners quit because they think the progress is too slow. They think results should come fast. They look at others who seem wealthy already, and they feel discouraged. But every person who is rich today once stood where you stand. They started small. They made mistakes. They waited. And their patience was rewarded. Wealth is not about luck. Wealth is about time and steady effort. If you stay committed, your future becomes brighter with each day. It is like climbing a mountain. From the bottom, the top looks far away. But every small step takes you closer. If you stop, you stay where you are. If you keep going, you reach the peak. In the beginning, you may feel like your savings are too little. You may feel embarrassed to invest such a tiny amount. But do not judge the seed by its first day. Judge it by what it becomes after years of growth. Your money will grow if you keep feeding it. Your habits matter more than the amount. Every day offers a choice. Spend now for temporary happiness, or save and invest for long-lasting freedom. The first choice feels exciting in the moment. The second choice feels powerful for a lifetime. This power is in your hands. You decide your financial future through your daily actions. Think about the life you want in the future. A comfortable home, time with family, freedom to travel, a peaceful retirement. These dreams are possible. They are waiting for you. But you must take the first step toward them. Starting early gives your money more time to grow. Starting small gives you confidence to continue. Starting now is the smartest decision you can make. You may still feel unsure. You may still worry about making mistakes. That is normal. Every beginner feels that way. But doing nothing is the only real mistake. Because when you do nothing, your future stays the same as your present. This chapter is an invitation to begin, to take control, to believe that you deserve a wealthy life, not a life filled with stress, loans, and fear, but a life filled with peace, options, and joy. So let this day be your starting point. Open the door to your future. With one small act, you tell the world, I am ready to grow. I am ready to build wealth for myself and my loved ones. Now that you understand how small beginnings lead to big outcomes, let us move to the next chapter, where we learn why so many people fear investing and how you can rise above that fear with simple knowledge and calm confidence. Chapter 2. Why most people fear investing. Fear is one of the biggest barriers that stops people from building wealth. It is not the lack of opportunity. It is not the lack of money. It is fear. Fear of losing money. Fear of making the wrong choice. Fear of not understanding. This fear keeps many people stuck, even when they truly want a better financial future. Fear comes from uncertainty. When something feels unfamiliar or unclear, the mind becomes protective. It whispers thoughts like, what if I lose everything? What if I choose the wrong investment? What if I am not smart enough for this? But the mind is not trying to stop you from success. It is trying to protect you from the unknown. The interesting truth is this: fear disappears as knowledge grows. The more you understand investing, the more confident you feel. Confidence does not come first. Learning comes first, and confidence follows. Many people also fear investing because they only hear dramatic stories. Stories of people losing money in the stock market. Stories of crashes, drops, and uncertainty. News channels love fear. Fear gets attention. Fear gets views. But the full truth is never shown. People lose money mostly when they invest without knowledge, without patience, or with emotional decisions. On the other side, many people become wealthy slowly and quietly by investing wisely over many years. But that story is not exciting enough for headlines, so it remains silent. When you look deeper, you discover something powerful. Investing is not gambling. Gambling depends on chance. Investing depends on strategy. Gambling is emotional. Investing is disciplined. Gambling happens fast. Investing works slowly over years. There is another reason people fear investing. They think it is only for experts or highly educated individuals. They imagine charts, numbers, complex formulas, and complicated language. This creates a mental wall. They believe they are not smart enough. But investing does not require advanced math or perfect predictions. It only requires understanding simple principles and applying them consistently. You do not need to beat the market. You do not need to pick the perfect stock. You do not need to guess what will happen next year. Instead, you need patience, clear goals, and a simple approach. Some people fear investing because they want instant results. When results do not appear fast, they think something is wrong. But wealth is like fitness. You cannot expect a strong body after one workout. You build strength over time, step by step, routine by routine. In the same way, money grows when you give it time. Another fear is the feeling of losing control. When your money sits in a bank account, you feel safe because you can see it. But when you invest, your money moves into the market. It goes on a journey. It grows, falls, grows again, and continues to rise over time. This movement feels scary, but movement is natural. Nothing valuable grows in a straight line. Trees sway in storms. Waves rise and fall. Yet both remain strong over time. The key to reducing fear is to think long-term. Short-term movement feels chaotic. Long-term growth feels steady and predictable. History shows that markets grow over long periods. They may fall for a while, but they rise again, always. This pattern has repeated over many decades and across many countries. It happens because economies grow, businesses grow, innovation grows, human progress never stops, and when progress grows, the market eventually grows too. Knowledge creates confidence, but action creates transformation. At some point, you must move from learning to doing. Even a small investment teaches more than hours of reading. Once you start, your fear slowly fades. Your confidence becomes stronger. You begin to understand how investing works, not from theory, but from experience. Remember this truth. Doing nothing is more risky than investing wisely, because money loses value over time due to inflation. Prices rise, but money that is not invested stays the same. So if you do nothing, you slowly lose purchasing power without realizing it. Investing protects your future by helping your money grow faster than inflation. Fear will always exist, but you do not need to remove fear completely. You only need to make sure fear does not control you. Let knowledge guide you instead. Now that you understand where fear comes from and why it stops so many people, the next step is learning how money can grow on its own once you start investing. In the next chapter, we explore the powerful idea that makes wealth feel effortless. The idea of compound growth, where your money earns more money without extra effort from you. Chapter 3. The power of compound growth. There is a secret force in the world of money that many people do not fully understand. A force that quietly turns small savings into large wealth. A force that works day and night even when you are sleeping. This force is called compound growth. It is one of the most powerful tools ever discovered for building wealth. And the best part is, you do not need to work harder for it to happen. You simply need to give your money enough time. To understand compound growth, think of a snowball at the top of a hill. At the start, the snowball is small, but as it rolls down the hill, it picks up more snow. And with more snow, it grows bigger. The bigger it gets, the faster it grows. It becomes huge by the time it reaches the bottom. Your money grows in the same way. At first, you see only small results, but slowly and surely, your money begins to earn more money. This extra money also earns on its own, and the cycle continues. Another simple way to picture compound growth is through planting a tree. You plant a small seed. It becomes a tiny plant. Over time, it grows into a strong tree with many branches. Each branch gives more leaves. More leaves feed the tree and help it grow even more. Your money is the seed. Your investments are the soil and sunlight. And compound growth is the growing process that never stops as long as the tree stays alive. Many people ignore this power because the beginning looks slow. They expect quick results. They want to see big growth in a short time. But compound growth does not work that way. It works quietly. It works patiently. It rewards those who stay in the game. The longer you stay invested, the stronger your money becomes. Time is your greatest partner in investing. Even small amounts can grow into large amounts when given many years. This is why starting early is so important. Every year you wait is a year of growth lost. A young person who invests a little each month can build more wealth than someone older who invests a lot more later. Because time is more powerful than the size of the investment. We can also understand compound growth by thinking of learning. When you learn something new, your knowledge grows. Then you use that knowledge to learn even more. Soon your learning becomes faster because you already have a strong base. Money behaves in the same simple way. Growth that builds on earlier growth becomes bigger and stronger as time goes on. Some people believe they must always find the best investment or chase the highest returns. But compound growth teaches a different lesson. You do not need the highest growth rate. You only need steady growth for a long time. Slow and steady becomes powerful over years. A calm approach often beats a fast approach filled with stress and mistakes. There is a helpful rule to remember. The more your money stays invested, the less you need to worry about everyday up and down changes in the market. Because while the market may jump and drop from year to year, the long path usually moves upward. The world grows. Businesses grow. Human progress grows. And when progress grows, wealth grows with it. The real magic of compound growth is this. Your money works for you. It becomes an employee that never sleeps. It creates value while you live your life. Each day, your future grows without extra effort. This is why wealth can one day feel effortless. Most people underestimate what they can achieve in many years. They focus too much on what they can achieve in 1 month or 1 year. They give up too soon. They stop watering the seed before it becomes a tree. They leave the hill before the snowball becomes big. Do not make that mistake. Stay patient. Stay invested. Give compound growth time to show its true power. You may look at your investment in the beginning and think, this is too small. This is growing too slowly. Why should I wait? But remember this truth. Big results come from small actions repeated again and again over time. Time is the secret ingredient that unlocks wealth. Compound growth not only builds money, it builds confidence. When you see steady progress, you feel encouraged. You start to trust the process. You learn that wealth is not created through luck or sudden jumps. It is created through consistent effort and patience. The greatest benefit of this powerful idea is freedom. Freedom to make choices without worrying about money. Freedom to spend time how you want. Freedom to support your loved ones. Freedom to live with peace instead of stress. This freedom is possible because compound growth keeps pushing your wealth to rise quietly in the background. So let this chapter stay in your heart. Let it guide your actions. Trust the slow and steady approach. Give your money time to grow. Let patience be your partner. Let consistency be your strategy. And let compound growth be the engine that drives you toward effortless wealth. Now that you understand how money can multiply when you give it time, we move to the next important idea. To use compound growth fully, you must have money left to invest, and that requires spending a little less and investing a little more. In the next chapter, we learn how smart spending choices create a stronger future for you, and how every saved dollar becomes a builder of your wealth and freedom. Chapter 4. Spend less, invest more. Wealth does not only come from how much you earn, it also comes from how much you keep. Many people increase their income, yet their bank account does not grow. They buy more things, upgrade their lifestyle, and chase short-term pleasure. Their spending rises with their earning. This is known as lifestyle inflation. It feels exciting at first, but it destroys long-term wealth. True wealth begins with control. Not control based on strict restriction or suffering, but control based on awareness and intention. When you understand where your money goes, you take back your power. Every dollar you choose not to spend becomes a soldier working for your future. Every saved amount grows through compound growth. Every mindful choice builds your peace and freedom. Spending less does not mean living a sad or boring life. It means spending wisely on what truly matters to you. Many people buy things not because they need them, but because emotions push them. Sometimes boredom, sometimes stress, sometimes desire to impress others, sometimes fear of missing out. This emotional spending may feel good for a moment, but later it brings regret. When you spend thoughtfully, every purchase brings real value. You begin asking simple questions before buying. Do I really need this? Will this matter 1 month from now? Is this worth delaying my financial freedom? These questions turn automatic spending into conscious spending. A helpful mindset is this: pay yourself first, before paying bills, before buying things, before spending on entertainment. Set aside a small amount for investing. It can be a weekly habit or monthly habit. This habit is more important than the amount. Because habit builds progress, and progress builds wealth. Even if money feels tight, saving a little is possible. It may not feel powerful, but small steps create momentum. Over time, you begin to notice patterns. You start identifying unnecessary expenses, maybe less online shopping, maybe fewer random subscriptions, maybe fewer impulse purchases. Each small change leads to more control. Another helpful idea is separating wants from needs. Needs are things that support life and stability. food, shelter, health, basic comfort. Wants are everything beyond that. Wants are not harmful. But when wants replace needs in priority, money disappears quickly. Balancing wants and needs creates financial strength. Modern society encourages constant spending. Advertisements are everywhere. New gadgets, new clothes, new trends. The message is clear. Buy more. Upgrade more. Live bigger. But happiness does not come from things. Happiness comes from meaning, relationships, health, and peace. And peace grows stronger when money is handled wisely, when you spend less and invest more. Something powerful happens. Your future becomes safer. Stress begins to fade. You realize you do not need everything you see. You stop comparing yourself to others. You start valuing simplicity. Simplicity brings clarity. Clarity brings confidence. Confidence brings growth. Many successful investors and wealthy individuals live simple lives. They focus on value, not appearance. They know that controlling spending is a foundation for wealth building. A strong foundation supports big results. Instead of asking, "How much can I buy?" ask, "How much can I invest for my future?" Every purchase has a hidden cost. The cost of the investment it replaces. When you learn this truth, you become more thoughtful. Think of money like energy. You can use it now for quick pleasure, or you can store it and grow it to create long-term power. The choice belongs to you. Living below your means does not limit life. It expands it. It gives you choices. It gives you freedom. It gives you a future that feels secure. When you reach a point where saving feels natural and consistent, investing becomes easy. You no longer worry about where the money will come from. Because you have created space for it, you have made investing a priority in your life. And this is the heart of the chapter. Spend less not because you must. Spend less because you choose freedom over temporary pleasure. Invest more, not because you feel forced. Invest more because your future deserves to grow. Now that you understand the importance of controlling spending and building the habit of saving, the next step is learning where to put that money. Not every investment is simple or safe. But there is one approach that makes investing easier for beginners and powerful for long-term growth. Chapter 5. Choose simple investments. When people first start learning about investing, they often feel overwhelmed by all the choices available. There are stocks, bonds, real estate, commodities, cryptocurrency, mutual funds, index funds, exchange-traded funds, and many other complex financial products. The investment world can look confusing and noisy. This confusion can make beginners freeze and do nothing. But the truth is this: you do not need complicated investments to build wealth. Simple investments often work best, especially for beginners. A simple investment strategy has many benefits. It is easier to understand. It reduces stress. It helps you avoid emotional decisions. And, most importantly, it allows you to stay consistent over a long period of time. The goal is not to feel smart. The goal is to grow your wealth peacefully and predictably. One of the simplest investing tools available is the index fund. An index fund is a type of investment that holds many companies inside one single fund, instead of choosing one company and hoping it succeeds. An index fund spreads your money across many companies. This reduces risk and increases stability. If one company fails, you are still safe because many others are growing. This approach follows the lesson. Do not put all your eggs in one basket. Index funds have another benefit. They require no special skill or frequent decision-making. You do not need to study charts every day. You do not need to guess which company will rise or fall. The market as a whole tends to grow slowly over time. By owning a piece of the whole market, you grow with it. This turns investing from a stressful activity into a calm, long-term habit. Another simple investment tool is the exchange-traded fund, also known as an ETF. It works very similar to an index fund. It gives you access to many companies at once. The main difference is that you can buy or sell an ETF like a stock. For many beginners, ETFs are convenient because they offer the same stability and simplicity as index funds. Some people prefer investing in individual stocks. This can be rewarding, but it requires knowledge, research, and emotional control. If you pick the right companies, you may see fast growth, but if you make mistakes, losses can come quickly. For beginners, building wealth with individual stocks can feel stressful. This is why many new investors start with index funds or ETFs and slowly learn more before exploring individual companies. Another simple investment option is bonds. Bonds are less risky, but also grow slower. They offer stability and protect your money during market drops. Some people mix stocks and bonds for balance. This combination creates a smoother growth path, less up and down movement, more predictable progress. Real estate is another popular investment. It can create long-term wealth and provide rental income. But real estate requires more money, time, and management. It is not as simple as buying a fund. So while it can be powerful, it is better considered after you understand basic investing and have a strong financial base. The key message of this chapter is this: do not chase complicated strategies. Do not follow every trend or hot tip. Avoid investments you do not understand. A simple investment plan is easier to follow, and a plan you follow consistently is more powerful than a perfect plan you abandon. Many of the most successful investors in history follow simple strategies. They focus on patience instead of prediction. They invest in broad markets instead of guessing winners. They choose long-term security over short-term excitement. Their results may not look dramatic at first, but over many years, their wealth grows strong and steady. A simple approach also protects you from emotional investing. When the market rises, many people feel excited and buy too much. When the market falls, many people panic and sell too soon. These emotional decisions can destroy wealth. But when your investments are simple and long-term, you can ignore temporary noise and stay focused on your future. Here is a peaceful way to think. You do not need to beat the market. You only need to be in the market and stay invested for a long time. Simple investing allows you to do that without confusion or anxiety. Choosing simple investments is like driving on a straight, clear road. No complicated turns, no sudden surprises, just steady forward movement. You do not need to impress anyone with complex strategies. Your goal is not to look smart. Your goal is to build wealth that supports your life, your family, and your dreams. So keep investing simple. Choose tools that are stable, easy to understand, and suitable for long-term growth. Let time and consistency do their work. Now that you understand the importance of choosing simple investments, we move to a concept that makes simplicity even more powerful, a habit that transforms small steps into massive progress. In the next chapter, we explore the magic of consistency and how repeating small investments again and again turns your journey into effortless wealth. Chapter 6: The Magic of Consistency. If there is one habit that can change your financial future more than any other, it is consistency. Consistency means doing the same positive action again and again, even when it feels small, even when life becomes busy, even when progress seems slow. It is the quiet engine behind every great success story. When you invest regularly over a long time, your wealth grows stronger with each step. Not because of luck, not because of a perfect strategy, but because you kept going. Many people believe they must wait for the perfect moment to invest. They wait for higher income, lower expenses, better market timing, or more confidence. But the perfect moment almost never comes. While waiting, they lose valuable time. And time is the most important ingredient in wealth building. Consistency removes the pressure of timing the market. You do not need to guess the best day to invest. You simply invest on a schedule, weekly, monthly, or whatever works for you. When the market is high, you buy a little. When the market is low, you buy more with the same amount of money. Over time, this smooths out the ups and downs. This approach is called dollar cost averaging, but you do not need to remember the name. You only need to remember the habit. Think about the power of daily exercise. A short walk every day builds better health than one long workout once a month. Progress is created by repetition. Money follows the same rule. Small amounts invested consistently can become huge amounts in the future. You do not notice the change at first, but slowly the numbers grow larger and larger. Then one day you look back and realize how far you have come. Consistency also builds discipline. It trains your mind to focus on the long term. It reduces the chances of emotional decisions. When everyone around you is worried about market drops, you stay calm because you have a plan. Your plan does not change because of fear. Your plan does not change because of excitement. Your plan continues because you continue. Many beginners quit investing too soon. They start with energy and excitement, but when they do not see fast results, they stop. They think the journey is not working. Yet, wealth grows secretly in the early years. It grows slowly at first, then faster later. The long-term rewards are waiting, but only for those who stay long-term. Here is a comforting truth. You do not need big money to be consistent. Even a tiny amount invested again and again builds momentum. If you keep your habit alive, the future takes care of itself. Your money keeps growing because compound growth never sleeps. Your future keeps improving because you stayed committed to the journey. Consistency also protects you from the biggest enemy of wealth: procrastination. Waiting feels easy now, but it becomes painful later. When years pass without action, regret appears. But when years pass with consistent action, pride appears. You become proud of the choices you made and the future you built. Think of consistency like watering a plant. If you water a seed once and never again, it dies. If you flood it with water once a month, it suffers. But if you give it a little water every few days, it grows strong. Your investments need the same kind of care. Small but regular attention. No rush. No panic. Just steady progress. Another beautiful benefit of consistency is confidence. Every time you invest, you remind yourself, I am building something important, even if no one sees it. You know the truth. Your future is becoming stronger. Your financial stress is becoming weaker. Your dreams are becoming achievable. Consistency does not mean perfection. Some months you may invest more. Some months you may invest less. Life changes, and that is normal. What matters is that you never stop completely. You always find a way to stay connected to your future, to make consistency easier. Automate your investments. Set up automatic contributions so the money goes into your investment before you even think about spending it. This simple step can transform your progress. You protect yourself from emotional choices. You protect yourself from forgetting. Your plan becomes automatic, like breathing. Consistency is not loud. It is not flashy. It does not impress people quickly. But it builds the kind of wealth that lasts for a lifetime. And that is the true goal of smart investing. You have now learned how small steps turn into powerful results. In the next chapter, we will go deeper into another challenge many investors face, even with a good plan. Emotions can get in the way. Fear, excitement, and impatience can destroy years of progress in just one moment. So in the following chapter, we learn how to avoid emotional investing and protect your path toward effortless wealth. Chapter 7. Avoiding emotional investing. Even when you have a good plan, emotions can still create trouble. Money connects to survival, comfort, pride, and fear. So when the value of your investments rises or falls, your emotions react. Sometimes excitement takes over. Sometimes fear takes over. If you are not careful, emotions can control your decisions. Emotional decisions are often quick, impulsive, and harmful to long-term success. The market naturally moves up and down. Some days it rises, and everyone feels confident. Some days it falls, and people panic. This cycle is normal. It has happened for many decades, and it will continue. Nothing in life grows in a straight line. Not the economy, not businesses, not investments, But many beginners expect constant growth. So when they see prices falling, they panic. They say things like, "I should sell before it gets worse." Or when prices rise quickly, they say, "I should buy more before it goes even higher." Both reactions come from emotion, not logic. Fear and greed are the two strongest emotions in investing. Fear makes you sell at the wrong time. Greed makes you buy at the wrong time. Fear protects you, but also limits you. Greed excites you, but also blinds you. Fear happens during market drops. You see your investment value going down. Your brain imagines the worst case. You feel the urge to escape the situation. But selling during a drop locks in permanent loss. Most people who sell out of fear regret it later, because history has shown again and again that markets recover with time. Greed happens when the market rises quickly. People see others making money fast and want the same rush. They stop thinking long term. They take bigger risks. They chase hot stocks, new trends, or rumors. When the excitement fades, many lose money and feel confused about what went wrong. The key to avoiding emotional investing is to prepare your mindset before emotions appear. You need a plan that guides you when your emotions try to take control. A plan that reminds you why you started. A plan that remains stable while the world feels uncertain. Your plan should include clear goals. Ask yourself, why am I investing? What future am I building? These answers give you strength during emotional moments. They remind you that investing is not about today, it is about tomorrow. Another powerful habit is staying long-term focused. When the market drops, remind yourself, this is temporary. When the market rises quickly, remind yourself, this does not last forever. Both ups and downs are part of the same journey. When you look at a chart of the market over many decades, the line rises upward despite short-term chaos. Time smooths volatility. Patience protects wealth. Avoid constantly checking your investments. Watching your balance every day creates emotional stress. It makes small changes feel huge. This leads to worry, excitement, fear, and pressure. Instead, check monthly or even yearly if your plan is long-term. Less watching means less reacting. Less reacting means better decisions. Another helpful tool is automatic investing. When your investments happen automatically, you remove emotional choice. You do not ask, should I invest today or wait? The decision is already made. Your habit protects you from emotional mistakes. Education also reduces emotional reactions. When you understand how markets work, you stop fearing normal fluctuations. You understand that drops are opportunities, not disasters. You understand that rising markets are not signals to take risky shortcuts. Knowledge turns fear into patience. It turns confusion into confidence. It is also important to avoid comparing yourself to others. Some people talk about quick profits or lucky gains. These stories make you feel like you are missing out, but you do not see their losses, stress, or mistakes. Your journey is not a competition. Your only goal is to build a secure and peaceful future for yourself. There is another emotional trap called impatience. People want fast results. They want wealth in months, not decades. When progress feels slow, they change strategy too quickly. They jump from one idea to another. But constant changes prevent long-term growth. Investing rewards the patient, not the impatient. Remember this truth. The market is a roller coaster. But your behavior does not have to be. You cannot control the market, but you can control your reaction to it. Calm decisions create wealth. Emotional decisions destroy it. When you feel fear or greed, pause. Do not act immediately. Take a breath. Review your plan. Ask yourself, is this decision based on my long-term goals or temporary emotion? Most of the time, doing nothing is the smartest choice. Avoiding emotional investing is not about removing emotion. It is about understanding it. It is about acting from clarity, not impulse. Now that you understand how emotional reactions can interfere with your path to wealth, it is time to explore the next mindset shift. The true power of investing reveals itself fully only when you think long-term. In the next chapter, we will learn how long-term thinking protects your wealth, strengthens your patience, and keeps you moving forward even when the world feels uncertain. Chapter 8. Long-term thinking. One of the most important skills in investing is the ability to think long-term. Most mistakes in investing happen because people think only about the next day, the next week, or the next month. They react to short-term news, short-term market changes, or short-term emotions. But wealth does not grow in the short term. Wealth grows slowly, steadily, and quietly over many years. Long-term thinking allows you to stay calm through temporary ups and downs. It reminds you that the journey of investing is not a straight path. It is a path with twists, turns, storms, and sunny days. Many new investors struggle because they expect fast progress. When the results are slow, they feel disappointed. But slow growth is not failure. Slow growth is normal. Just like seeds take time to become trees, investments take time to become wealth. History shows a clear pattern. Markets rise, fall, rise again, and continue growing over decades. Wars happen, recessions happen, crises happen, but after every fall, markets recover, not immediately, but always eventually. Why? Because human progress continues. Businesses adapt, innovate, and grow. Technology improves. Populations expand. Needs and dreams increase. And with progress, the value of markets grows. When you think long-term, you stop worrying about temporary market drops. Instead of seeing a drop as danger, you begin to see it as an opportunity, a chance to buy investments at a lower price, a chance to build even more wealth in the future. Short-term thinking creates fear. Long-term thinking creates peace. Long-term thinking also protects you from chasing quick success. Trends appear, then disappear. Some investments look exciting for a short time. People rush in with excitement and rush out with regret. But excitement fades. Hype fades. What remains strong is patience. The world often celebrates instant results. Fast profit, quick success, overnight richness. But these stories are rare, and many of them are not true. Most wealthy people reached financial freedom through years of consistency, discipline, and long-term thinking, not through sudden luck. When you think long-term, you focus on progress, not perfection. You do not worry if 1 month or 1 year looks slow. You know the journey lasts decades. You understand that temporary movement does not change your final destination. Another benefit of long-term thinking is emotional stability. When the market rises, you do not feel the urge to chase excitement. When the market falls, you do not panic. You remain grounded because your mind is focused on the horizon, not the noise around you. Long-term thinking also helps you build better habits. You make smarter spending choices. You avoid unnecessary debt. You invest regularly. You protect your future instead of living only for the present. A helpful way to practice long-term thinking is imagining your future self. Think of who you want to be in 5 years, in 10 years, in 20 years. Do you want peace or stress? Freedom or pressure? Security or struggle? Your future depends on the decisions you make today. Each investment is a gift to your future self. Each consistent step is a vote for the life you want. Thinking long-term does not mean you ignore the present. It means you balance today's comfort with tomorrow's freedom. You enjoy life while also preparing for a better future. Another powerful mindset is this: focus on time in the market, not timing the market. No one can predict perfect moments to buy or sell. Not experts, not analysts, not algorithms. But you do not need perfect timing. You only need long-term commitment. Think of a journey across the ocean. Waves rise and fall. The water is never still. But if the ship keeps moving forward, it eventually reaches its destination. Your investments are the ship. Time and patience are the wind that moves it. Long-term thinking turns investing into a calm experience. It removes pressure. It removes stress. It replaces fear with confidence. You begin to realize something powerful. Wealth is not built by speed. Wealth is built by time. So remind yourself often, I am not investing for the next month. I am investing for the next decade. I am not building temporary results. I am building lifelong freedom. Now that we have explored the power of thinking long-term, it is important to remember that no investor is perfect. Mistakes will happen, and that is part of the journey. In the next chapter, we will learn how to treat mistakes not as failures, but as lessons that make you stronger, smarter, and more prepared for future success. Chapter 9. Learn from mistakes. Every investor, whether beginner or expert, makes mistakes. Mistakes are not signs of failure. They are signs of progress. They show that you are learning, practicing, and moving forward. The only true mistake is giving up. Many beginners fear making mistakes so much that they never begin at all. They wait until they know everything. They wait until they feel fully confident. But perfect confidence never arrives before action. Confidence grows only after experience. Experience grows only after starting. And starting always includes mistakes. When you invest, you may buy at the wrong time. You may sell too soon. You may panic during a drop. You may chase something that looks exciting but has no long-term value. Every investor has done these things. The difference between those who succeed and those who quit is simple. Successful investors learn from their mistakes. Unsuccessful investors repeat them or run away from them. Mistakes bring valuable lessons. They teach patience. They teach discipline. They teach emotional control. They teach you what truly matters and what does not. A mistake that teaches you something is never wasted. When something goes wrong, avoid blaming yourself. Instead, ask calm questions. What did I learn? What will I do differently next time? How can this make my future stronger? This mindset turns frustration into wisdom. Some people hide their investing mistakes because they feel ashamed. But mistakes are part of the story. They make you wiser. They help you understand the market better. They shape your personal investing style. Think of learning to ride a bicycle. No one learns without wobbling. No one learns without falling. But each fall teaches balance. Each attempt makes you better. Soon, you ride smoothly. Investing is similar. In the beginning, everything feels uncertain. But with time, what once felt confusing becomes clear. One common mistake beginners make is checking their investments too often. They see changes and react emotionally. Another mistake is trying to predict the market. People believe they can know the perfect moment to enter or exit, but even experienced investors cannot predict perfectly. Trying to do so only creates stress. Another mistake is comparing yourself with others. You may hear stories of someone doubling their money quickly. This can create jealousy or impatience. But those stories are often incomplete. You do not see their losses, risks, or sleepless nights. Your journey is your own. Comparison steals peace. Focus on your path. A mistake many people make is investing only when the market feels safe. They wait until everyone is confident. But by then, prices are often already high. Then, when the market falls, they feel afraid and avoid investing. This pattern prevents growth. A better approach is steady investing no matter what the market feels like. This removes emotion and adds discipline. Another mistake is investing too much too fast. Some beginners become excited and put in more money than they can afford. Then if the market falls, they panic. It is wiser to start slow. Build understanding. Build comfort. Build a habit. Then grow the amount as your confidence grows. Some people also make the mistake of stopping too early. They invest for a short time, see small results, and lose motivation. But investing is not about fast wins. It is about long-term growth. Like a seed, the beginning looks quiet, but hidden progress is happening. When mistakes happen, remind yourself why you started. You are building freedom. You are building stability. You are building a better future. Mistakes do not erase your progress. They strengthen it. Keep a simple journal of your investing journey. Write what decisions you made and why. Later, look back and observe. This helps you understand your emotional patterns. It turns investing into a mindful practice. Be gentle with yourself. You are learning a skill that takes time. No one masters it in one day. Every great investor has a long history of mistakes behind their success. Your mistakes are stepping stones, not walls. When a mistake happens, do not quit. Do not panic. Do not judge yourself. Just keep going. Because the real reward does not come from perfection. It comes from persistence. With every mistake you overcome, you grow stronger and calmer. You begin to trust the long-term process. You understand that the journey is not about avoiding all difficulty. It is about learning, adapting, and continuing with wisdom. Now that you understand how mistakes can guide you rather than stop you, the next part of the journey is about enjoying the process itself. Investing is not only about future wealth, it is also about building peace, stability, and confidence along the way. In the next chapter, we explore how to enjoy the journey and create a mindset that makes wealth building feel simple, meaningful, and effortless. Chapter 10. Enjoy the journey. Investing is not only about reaching a final destination, it is also about the life you live while moving toward that destination. Many people think they will only feel happy once they achieve a certain amount of wealth. But true freedom begins long before the goal is reached. It begins when you change the way you think about money. It begins when you feel calm instead of rushed. It begins when you enjoy the process rather than wait for the ending. Money is a tool. It is not the purpose of living. You are not investing so you can spend your whole life worrying about numbers. You are investing so you can create peace, choices, and opportunity. When you enjoy the journey, investing becomes something positive instead of stressful. You no longer feel pressure to rush. You stop checking your investments every day. You stop chasing trends and shortcuts. Instead, you trust the process. You stay consistent. You focus on progress, not perfection. Enjoying the journey also means celebrating small wins. Maybe you invested for the first time. Maybe you avoided an emotional decision. Maybe you stayed consistent for another month. These small achievements matter. They build confidence. They remind you that success is built step by step. You also begin to notice that investing is teaching you more than money. It teaches patience. It teaches discipline. It teaches emotional strength. It teaches long-term thinking. These lessons help in every part of life, not just finance. As your mindset grows, you may start feeling grateful for the slow process, because slow growth gives you time to learn and become wiser. If wealth came instantly, many people would lose it because they would not know how to manage it. The slow journey prepares you to handle success responsibly. Another important part of enjoying the journey is balance. Invest wisely, but also live your life. Save money, but also create meaningful memories. Build your future, but also appreciate your present. True wealth includes experiences, health, relationships, and time. Money supports these things, but it cannot replace them. When you find balance, you begin to feel peaceful. You no longer feel controlled by money. You feel guided by purpose. Remind yourself often, you are building a life, not just a bank account. There may still be moments of doubt or impatience. That is normal. When those feelings appear, return to your why. Why did you start? Who are you doing this for? What kind of future do you want? These reminders reconnect you with purpose and remove pressure. The journey of investing becomes beautiful when you trust the process and allow time to do its work. Let each step feel meaningful. Let each month of consistency feel like progress. Let each year remind you how far you have come. You are not just growing money. You are growing confidence. You are growing choices. You are growing freedom. And as you continue, you begin to realize something very important. Wealth is not just about the money you have. Wealth is about the peace you carry. Now that you understand how to enjoy the journey, you are ready for the final part of this book. A simple reminder that ties everything together and shows why effortless wealth is possible for anyone willing to follow the quiet, patient, and consistent path. In the conclusion, we revisit the heart of this idea, the lazy path to wealth, where simple actions create powerful results over time. Conclusion. By now you understand that building wealth does not require complexity, luck, or constant stress. It requires patience, simplicity, and steady actions repeated over many years. The lazy path to wealth is not about doing nothing. It is about doing the right things and allowing time to multiply the results. It is about trusting the process instead of chasing fast success. It is about believing that small steps can create big change. You now know that fear can slow you down, but knowledge can replace fear with confidence. You have learned the power of compound growth and why time is your greatest partner. You have discovered that controlling spending gives you freedom, not limitation. You have seen how simple investments and consistent habits can build a strong financial foundation. Along the way, you also learned to avoid emotional decisions. You learned to think long-term. You learned that mistakes are part of the journey, not the end of it. And most importantly, you learned to enjoy the process. Wealth is more than money. Wealth is peace. Wealth is choice. Wealth is time with the people you love and the life you choose to live. You are now ready. Not because you know everything, but because you know enough to begin. And beginning is the most important step. So start small. Stay consistent. Be patient. Protect your plan. And trust the journey. Effortless wealth is not just possible. It is waiting for you. This is your path now. Walk it with calm confidence. Your future self will thank you.